Welcome back to my YouTube channel. I just want to give you a full breakdown of Nasdaq, the one I took yesterday. If you remember, guys, I did share the entry, and that trade was crazy. Was full entry, what we call a full margin entry. So the first thing that I want to do is sorry guys, let me just make something here. Let me just make something for you guys first so that you can see what is the picture. Okay, the picture is here, but I end up, okay, this is one is fine, so I'm gonna show you guys the picture. Just bear with me because I'm putting all the picture for you. Okay, so as you always know, I'm not a financial advisor. The things I'm showing you guys is based on my experience. So if you wanna do the same thing, make sure you practice and you put your all effort to understand the logic. And also, the best advice I can give you, don't trade everything you see in the market. Just select few stuff. Like me, I trade gold and I trade Nasdaq and USA 30. So I don't trade them like every day, but I apply. Let's say if I find a nice position on gold, then I'm gonna focus on gold or Nasdaq. But that is my watch list, is Nasdaq, USA 30 and gold. Plus aside, I'm trading also V75. So for this one, before you understand it, the first thing that I did for me to be able to catch the movement was the weekly, time frame. That was the things that I did on this Nasdaq. So I went to weekly time frame, try and understand how I could get the perfect entry. So the first things that I saw was, you see this hidden base, and how market manipulate this hidden base. It's like you have something like this. Example, this is your zone. You are waiting for market to come and react, let's say, to a QML. Just this example, the QML, then market give you something like this. Went up, and then market return, then continue. So you need to understand all this logic. Now people, they get lost from this one is because they saw a QML. According to them, a QML must hold the price. But you need to understand how is the price approaching your QML level. This is where the trap it happened. And also you need to understand the overall trend. How is the structure? It's not like because you have a QML like this and you expect market to come and test this area and drop, or you have some zone. Let's say here there is like a base drop, then you're expecting market to come back and sell from there. No, you need to understand how is the market playing. So guys, I'm gonna make sure I make this type of video for you guys so that you can also be aware of these things. Then when I saw this hidden base, so what is my main focus? My main focus is to see how is the price approaching here. Then we can see market get here, then market pull, the next candlestick open, then it push more to the upside. So we have the break of structure, market break structure, and continue pushing high. Why? Because market coming from a level where they come and mitigate their orders. If you can check here, we have a hidden base, and this one was what we call a liquidity, the inducement for them to do it, to buy. So when they are buying, the break structure here, if you are trading, let's say you are trading the ICT style, so what you could do for yourself is just that you give yourself a favor. This is the fair value gap. And then you know how people, they trade, they look for the 50% for them to take the entry. But what I did was I look at where there was a manipulation. Since I have this zone, this is my zone. Okay, two confluence at the same place. We have a fair value gap and we have the hidden base that was being ignored. Market didn't respect it, and we had a clean break. You see this clean break. We manipulate this area, then check the way market push. So what I was looking at, if you remember, this is the sell that I called on the previous, I think 2 weeks or 3 weeks from, I called this sell, that market is gonna sell from here. And market sold almost for 2 weeks, a crazy sell. Now, let us go to H4. Remember, this is the micro zone. So my time zone is like this. I look at weekly to H4, then H4 to M15. Also, I'm gonna look for like M15 to M5 just to see if I can have a clean direction. So the H4 is the micro zone, and the M15 and M5, it's a micro zone, the way I look for me to take the entry. I'm gonna show you guys here how you can use them for you to take the entry. So just make note and make sure you watch this video up until the end so that we can get more knowledge about the market and how you need to approach this market. So the first thing is, because I saw this area, that is the weekly time frame, I got my zone. So what I need to do is move now to H4 and try to understand what is inside H4. I'm not gonna take a trade because I see there is a 50% on weekly. No, I need to have a confirmation. And I'm gonna tell you guys why you need the confirmation, and you're gonna see how they manipulate this area. Then I go to H4. This is my H4 now. Do you see, this is the 50%. Then they come, they manipulate this 50%. But if you check aside, this side, what do you see? This is my hidden base that was being ignored. Then, where is the last movement that show us that this market is gonna push more to the upside? It's this one, all this zone. But what I'm gonna look at this footprint. You see this candlestick where it show like, okay, we have a strong momentum of market coming where the bullish momentum for market to push to the upside. So this is what I look at. Then if we go like this, do you see where market touch? Market touch my zone. While someone who took the entry at the 50%, because there was no order at the 50%, then they hit easy stop loss, then market continue again in this direction. So these are the things that you need to be aware of. And another thing that I want to look at is the way market is coming to my zone. For you to understand why market is reversing and why this zone was very important, is you need to understand the price cycle. When market give you these three push, so three drops to the downside, there is no way market can continue dropping before it make another correction. Do you see this? I've been teaching about these things all this time. So this is when you practice, you're gonna understand, okay, I have already three push, so what I'm expecting is for market to reverse. Then when you talk about the reversal pattern can be a shift in the market structure. A reversal pattern can be a double bottom, and a reversal pattern can also be a stop hunt. So how do you understand, okay, now I'm gonna have a stop hunt, or now I'm gonna have this shift in the market structure, or I'm gonna have the double bottom? It depends on the way the price is approaching a level. So let me show you. Let's say we have a decision point. This is your decision point. Example of a bearish candlestick, the engulfing candlestick, and this is your zone where you're expecting market to come in and buy from here. The only thing that you want to see is the way market is coming to this area. So the first thing is going to be how market get here, market push to the upside like this, then market come inside, then goes like that. So this is the way you have to look at the market before you take the entry. And another one, this is the type 1, and another one that I look most of is this. Market already get straight in my zone, then go to the upside, come create a shift in the market structure, then push like this. So I'm gonna make sure I just take the entry here. How do I take the entry there? I'm gonna use the candlestick pattern. When I see the candlestick forming, then I'll look, okay, is on the right zone for me to be able to catch the movement, then I'm gonna take from here. And here also, because there is a stop ant, we break this area. I'm going to also look at this area if there is a candlestick pattern for me to take. But the right way for you to trade is to wait for market to break this eye. When market break this eye, market will already show you that it took liquidity. Then what you're going to do is to wait for market to do it, to come back to the downside, mitigate an order, then fly. Same apply to this one also. Market to break, return somewhere, then continue. Already here you understand that I have a shift in a market structure. Then I have a break of structure. What I'm waiting for is for market to return. Then you can use also the double bottom, whatever it is. So in this case, what was happening, remember, this is my zone. This is where I'm looking at. Then what I want to see right now is, where is the liquidity? This was liquidity because there is people that they've been buying. When market touch this zone already, they start buying. And there is people, when they buy from here, market now understands, okay, there is people that they rush the trade, they come check this candlestick. The last push always be the strongest one. Then they come, take them, all of them out. But the only thing that you need to understand, let's say in terms of structure, you wanna mark your structure. You try to understand what was happening. You know this was the eye. Then we have this low. Then we create this one. As you can check, it is this one. We have this one, and we create that eye. Then we create again this low. We create this eye. Then we create this one. So for you to get now a confirmation for you to buy, if you don't know how to apply the candlestick pattern, you have to wait for market to break this eye. Remember, we are in H4. These things can happen fast in M5 or M15. Check what happened. They break this level. Why this one is a significant level to us? Because this one was the one that produced for us this low. At the same time, market was being stacking inside this range. So the main range, let's say if we go to daily time frame, you're gonna see we have this high to this low. This is our main range. And market is still struggle to take out this level. But at the same time, what you need to understand, since we are trading in H4, because each time frame got its own market structure. On a weekly, on a H4, what you understand is that we have was the range, start from here, then to here. Here, this is the inside, like market return back to create another lower high because we took out this low. So what you have to wait for is to see how market is going to react from this one, if we're going to continue respecting this zone. And at the same time, why I'm saying this one is another structure, because we took out this low, you see, we break the low, then market come back to create this area, then drop. So already this is lower low, lower high, lower low, lower high, lower low. Then we break the area. Remember, this is our daily supplier level. And I took a sell position from here. You guys knows about this. I took a sell position from here. Because of this, I refined my entry until this MPL, the one that is there, then I come to the downside. So yesterday what I did, after all this, because this was my fall process, the one I was looking at for me to be able to take the entry, I ended up realizing there was this area that was never been mitigated. You see, this one. And I did explain to you guys how you could get the entry from here on the previous video about the QML. There was a QML here. Then you guys, if you want, you can go and watch that video. You understand about it. And I will make sure I put it on the description so that you guys can watch also the video. So when I see this one, now what I was looking at, okay, inside this is my new range where I'm trading. I see there is a break of structure, but where is liquidity? For me to be able to see this zone is a valid zone. If you check here, this area, it's acting as a liquidity, because if you go to M15 or H1, I'm going to show you guys, you see that there is a liquidity there and market has to come and run that. So this is my zone. Then when I understand about all the fall process that I'm doing right now, so I need to shift now to M15 for me to be able to catch the movement. Now I go to M15, because you don't need so many time frame like what I normally see people now they're doing, let's say, so many times I cannot even say it, so many time frames. Remember, I told you guys, this area is going to be as a liquidity for them to come and buy from this zone. If you are only looking on the low time frame without understanding what is happening inside H4, it's very hard for you to be able to understand that, okay, this area is the one that is going to hold. So since I know my area, okay, I can say, okay, I have this zone and plus I have this block. So this zone here, this is the one is going to be my zone where I have to come and look for the buy position. If I want to rush the trade, I can rush the trades at the same time when market just touch my zone. You see, when market touch my zone, I can rush the trade. But what I did was before yesterday, I think I scalped the buy, if I'm not mistaken. I scalped the buy. Then I was waiting for a proper reversal candlestick. When I see the reversal candlestick, this is when I'm going to take my what? My entry. Then what I did, so I see, okay, there is this area almost close to the 50%, but is market going to come to this 50% or I must just take another entry? So I closed my position. Then I was waiting for market to do it, to come to the downside and give me direction. The level I was watching at was this candlestick. This is the one I was watching at, saying, okay, this one, market has to come and react to it. I end up realizing this one is just going to be a trap. Let me not take a trade from there. Let me wait a bit. So I waited a bit. Then I saw market did what? Market created this bullish engulfing candlestick. You see this one to show the direction that they want to reverse. So when this candlestick was opening, if you go on M5, you understand how I took the entry here. Then I take the entry somewhere here exactly. Because after this manipulation that they created, remember I told you on the second leg, I have to look for the candlestick pattern. What is happening on that candlestick? So I see, like if you are trading ICT, they don't gonna tell you that. But ICT will tell you, this is the proportion block. You see this candlestick. It trades inside the order block. I think proportion box, something like that, the way they call it. So, but in a short term is you have the bullish engulfing, then markets come and trade straight at the bullish engulfing. But at the same time, if you are trading, let's say, you want to get the proper confirmation, you need to see also structure on this area, the way market was coming to the downside. This is why we need to use M5. Then when you go to M5, so what you're going to see is this. You have this area. If we mark structure, you see, like, let me just mark for you guys. I'm not going to go too far. Okay, we have this area. Then if you go to M3, you're going to see this also was a normal structure. So this is the break of structure. And me, I took my entry somewhere here and my stop loss was just low. And when they create this liquidity, I did not even think like, okay, market is going to come again back to the downside. Why? Because according to me, since market is already mitigated this area, we have to fly. And this was happening. Then this was liquidity. And me, I took my entry on this one. Because what I expected was, okay, we break this low. This was a liquidity. You see, they did give the stop and the reversal that I normally look. We break structure, then we come down. There was no liquidity, but I just took it. Like in my mindset, it tell me, now just take the entry. And I went full force on this trade. Now, believe me, check what happened. So if you wanted to take the entry with a proper confirmation, because for people that they're trading ICT style, this is all their zone. But if you want to trade the footprint stuff, this is the candlestick that you could look for your entry, then your stop loss down. Sometimes you're going to look, say, let me wait for the body, then you could miss. Or you can just select all this area. This could be your entry, but my entry was here. And I knew market could never come to the downside. Why? We break structure, we create a stop, then this is what happening. And because of some of us that we rush the trade, institution, they know, okay, this is a liquidity. People that they rush here, they've already put the stop loss at the break even, because after we see we took out this eye, we put already our stop loss at the break even. Then the market will come, kick us out, then continue with the same movement. But me, I did not rush to update my stop loss, because from what I learned, I think I learned from HLZ was you don't have to rush to put a stop loss. You wait until market take a measure eye. When we take a measure eye, this is when you're gonna put a stop loss at your entry. Because sometimes when you rush to put a stop loss, and market just goes again, come back and took you out, then continue with the same movement, then you start regretting what happened. It start affecting your psychology. And when we are buying from here, what is our target? Our target is to see what market is going to do at this area. Now check what happened. Markets, this was what people they call a breaker or SR flip or S flip. Markets manipulate this area. What do you wait for? It's for market just to come and trade to the downside again, for you to be able to do what? For you to be able to take the movement. This is so simple. Market break the area, you come and refine your entry. This one was acting as a liquidity. You see this as a liquidity. They come, fill the order there, then they fly to the upside. So this was what I was looking at this market. I think I need to show you guys my my Telegram. This is the Telegram, and this is the entry I took. Remember I told you guys my entry was here. This is why I took my entry. Then at the end of the day, markets come back, but me, I did not leave my stop loss. You see guys, I did not put the stop loss before market close. When market took out this area, then they return back to trades inside there. This is when I decide, you know what, let me now put my stop loss, because I close most of my position. Then let me show you guys what happened. So this is my chart lab. This was all the entry I took yesterday. The entry I took yesterday, and gold ended up being a good trade after this. It ended up being a good trade, and this is what I closed yesterday from gold and NASDAQ. Just from the way I understand the market, the full process I give you, you don't have to look at so many time frame for you to be able to understand what is happening in the market. It's not like that, guys, because you're gonna see. Let me show you my time frame that I'm looking at. I don't look at so many time frame. This is the time frame I look at. So since I get the zone, I think I forgot to put daily. Where is daily? This is the time frame I look at. I don't look at M1. My only time frame I can look if I want to go low is M3. Beside M3, I don't look at other time frame, because there is no need for me to understand, like pushing so many stuff. And this was the entry, so I took yesterday. I'm sure I took the entry somewhere here. This is where I took my entry, and I'm still holding this entry up until now. And market is go with me on this area. So how many pips I did not even calculate that I made? 230 pips. Yeah, so this is the one. I hope this video is gonna make sense to someone outside there, and try to refine the way you are looking at the chart. I'm gonna make another video about when markets break your zone, what do you expect next? You need to keep your cool for you to be able to catch the movement. I hope you're gonna enjoy the video. So sharp, guys.